Hello folks, Charlie Gipple here with CG Financial Group, giving you a quick video from beautiful, muggy Des Moines, Iowa. Hey, I'm not a big fan of these videos done in the car, but I'm going to do it right now. Why? Because I just got off the phone with an agent, and I'll forget what we talked about unless I did this video right now. Now, he is yet another agent, a wonderful guy, a good friend, a great agent, but yet another agent who had been given some training on whole life insurance, as well as IUL at some meeting somewhere put on by another IMO. And he was full of these catchphrases and misinformation. If you've ever talked to me about these products, you know that I love these products, but you also know that I believe in being straight with the clients. These catchphrases such as, Mrs. Client, have you ever heard of a Section 7702 plan? Oh, you haven't? Okay, well, let's explain what a Section 7702 plan does. Folks, that's life insurance, right? I mean, these products are so good you don't have to apply the trickery, at least if you know how to explain them, which many times is kind of the problem. And many times that problem is exacerbated by people that should not be training on these. Now, the topic at hand was whole life insurance, again, which I love. I love for what it is that whole life insurance does. I do not love for what it is that whole life insurance does not do. To the point of this conversation, the agent says, well, so I can effectively tell my clients, with whole life insurance or IUL for that matter, that they are technically not taking money out of the policy. So not only are they not taking money out of the policy when they take a loan from the policy, he says. I said, no, it's a loan against the policy. When you think of how this works, the client's going to the company getting a loan, and that company is collateralizing two different values, the surrender value as well as the death benefit. But I digress, I said. He goes, okay, well, so Charlie, they're not taking money out of the policy technically. There's still a cash value there, right? And I said, yeah. He says, and am I right that cash value can still be growing by 5%? Am I right? I said, well, yeah. I said, however, the two values that are very important in whole life insurance as well as IUL is number one, the surrender value. Why is that important? Because once that surrender value hits zero, no more income comes out of the product. And as a matter of fact, the policy lapses. And as a matter of fact, if the client took out more than what they put in, then there's a big tax liability in that year for whatever it is above the basis that client took out or took from the company in loans. I said, but the second value is that death benefit value, that wealth that otherwise would go to somebody in the future. Once that hits zero as well, or the policy lapses, it's done. And make no mistake, Mr. Agent, I said, that when the client takes a loan against the policy, that the loan amount plus interest is applied against the surrender value, which drives that surrender value closer to zero, and it's applied against the death benefit, which drives that death benefit down closer to zero. So the company pays the client to take money from the policy out of the goodness of their heart? No, they do not. It's like any other situation. On one side, you have your investments, and yes, if those investments are going to grow by 5%, that's good, especially if on the other hand, you were to go to a bank and get a loan for, say, 4.5% or 4%. There is no magic in these products. It's basic economic fundamentals of opportunity cost. If you could get a rate lower at a bank than what the company will loan that money out to the policyholder for, then maybe the client should consider going to a bank for that. While also, if the client could get a better return somewhere else than what that client is able to get on their cash value, then maybe that client should look somewhere else for that. But keep in mind, what does make these products magical is the death benefit. And that gets to the core of what these products are, is they are life insurance. These are not just magical, create money out of thin air because the carriers are such good-hearted people and they just want to give the clients free money. Actually, they want to pay clients to take money from them. And this is not bashing carriers. This is just saying that there needs to be some realism, educated when it comes to whole life insurance as well as IUL. Because you know what? The fluffery, it's really not needed because these products are great at what they do. And whole life insurance and IUL, one of the other areas they're great is that excess premium that they pay, that the client pays, that goes into an account that can maybe grow by 4%, maybe grow by 5%. And should that client ever need liquidity, well, that sits in a little pool that client can access tax-free, but not while the company pays them.